I'm going to sound like the Sprint guy. Do you hear me now? All right, let's start over. So, happy Monday, everyone. It is 8:04 a.m. at this point on Monday, the 11th of June, 2018. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning's market stance is mixed. We have crude being at the bottom of the pack at 65.02, down 72 cents or 1.1% down, followed by the Japanese yen, the bonds, and so on. The leader this morning is Euro stocks, but also the Euro FX is up 27 pips or 0.23%. We do have an ECB announcement later this week. The DAX is also up. The Russell's up about 3 ticks, and the Dow is up 22 points. Really mixed this morning. Gold is up a tick or unched. The S&P is now unched. And so overall, just nothing to glean. We are holding steady in the S&P against Friday's high, which was a double top at 27.83 and a quarter. That's how we're setting up this morning. Looking at, so there's not really there's not a clear read on allocation, whether it's to risk or to safety this morning. The calendar this morning was mostly about the UK. Nothing for the US. For those of you who trade treasuries or the curve, we do have some auctions coming in at 11:30 Eastern, and 1 o'clock is a 10-year note for $22 billion. But other than that, the calendar is pretty clear. Looking at the rest of the week, since it's Monday, we have key numbers out of Europe again. CPI monthly budget in the U.S. On Thursday, we do have, on Wednesday, we have FOMC, PPI. Big deal there. And Thursday, the ECB rate decision. And ECB's Draghi's conference. And then on Friday, we do have University of Michigan sentiment, and the Eurozone CPI and so on. So that's how the week is laying out. Wednesday and Thursday are the most important releases. Let's take a look at what we expected Friday versus what we actually got. Friday, my primary and secondary expectation, given the way Thursday closed, was for the primary expectation being a test up that fails and we turn down and start moving lower, retesting the lower prices down to 56 and 27.49. Did not happen at all. The reason for this is because of the way Thursday traded higher and then just moved lower. The point of control moved lower, whereas the prior day's point of control kept moving up. It looked to me like it was running out of steam on the buy side. Completely wrong. Same thing for scenario 2, an immediate test lower and then up to the point of control and balancing for the rest of the day. That did not work out at all. What did work was not covered. Was scenario 3. What we had on the open on Friday, and I think we should walk through this a little bit because there are some interesting features. For those of you who are part of Convergent, I put up the ES recap with details. You should get these same details in the Head Trader channel. Here's the opening swing. Very, very clean, a very clean swing. Through the opening swing high is very obvious, 27.71 and a quarter. The opening swing low, 27.67, and we cross through the open again and crisscross through the open. I think there's a rap band called Crisscross, I think. And you could, so far, all you see is just sideways, right? This is an open auction in range. Sideways action. The market is just testing up and down, up and down. So short time frame traders, We do get a small failed auction. We test one tick below the opening swing low. So what we're looking for now is a push higher to confirm that buyers are in control. They tested below the opening swing low and could not find any sellers. A flush at the stock zone of 2766.50, and here we go. It's a clear one tick failed auction at the opening swing low. Buyer step in, extend the opening swing, extend the range higher. We go right to the point of control by about 2 ticks or a tick, and we go sideways from there. All right. So a very orderly auction until it just falls, pulls right back down. So now we have a double IB high right here. Okay. So now we have a double IB high stat, which is about 82% break by the end of the session. And then we fall all the way down to the low, and we set up a double IB low stat, which is an 83% probability historically of breaking that by the end of the session, breaking this price by the end of the session. Okay, so it's short time frame traders, and we run all the way through, break the IB high by 1 tick, and we have a 1 tick failed auction at the double IB high. So the double IB stat is fulfilled. The IB stat itself is fulfilled, which is about 97, 98% probability that one of these yellow lines is going to break by the end of the session. And we pull back to mid, and then we just go sideways. We have a legitimate range extension up, and then from there we continue sideways until the higher time frame traders wake up, and boom, there it is. 7.75 point rotation takes us through the entire value area of Thursday. We flag, they step aside, short time frame traders take over again, and then we just go sideways and sideways and sideways and sideways. It is Friday on it's a summer Friday. So we end up trading sideways, quite a bit of volume at 27.82.50 right here. This is where we close, and we shift the point of control all the way from here to here. So now we resume this point of control moving up on the day. However, the high is a double top between Friday's high and Thursday's high and Friday's high. We have a double top, so we have a weak high on an inter-day basis, not intra, but inter. And so that's how we ended up. That's the recap. I know that's pretty lengthy, but it's really important to see how the auction is proceeding, right? So we want to know, we want to characterize and explain, not explain, but cite the narrative, speak out the narrative. And what we have is a market that gaps down and immediately becomes responsive and goes right back up. Right back up. So scenario 3 that I didn't cover. Remember, every day has 5 scenarios. Okay, I just cover 1 and 2, the most probable. Scenario 3 was looking for a test lower against Friday's low, and then an impulse higher to value high, consolidate, and then a push through by only a few ticks of Friday's high at 83.50, which was a weak high, and then to set near the high of the range. That's what I was looking for on that scenario. And then the overnight session since Sunday's open has had an upward skew. We have a bit of a P-shaped profile. So this profile here looks a little bit like a P-shape, a little bit of short covering still. The volume overall is relatively light. We are in the rollover, so you have to take the delta and volume with a grain of salt, because a lot of it's just moving from one contract to the next. And what we have is a point of control that's completely in line with Friday's. with Fridays, and we have a higher high and higher low in the overnight session. We still have an upward skew, I believe, just as I said in the Head Traders channel. The conclusion that I draw is it's likely to continue higher on the reopen, which it did. And the multi-day trend is likely to continue. Price exploration higher continues to be successful, and buyers are being rewarded for their effort. Not seeing sellers come in and challenge higher prices so far, expecting a continuation of last week's grinding action up. That's what I'm looking for as a continuation as we push forward. And then as we look at, let's kill this, kill these charts, these boxes. What are we looking for today? Today, looking for, well, looks like we're pushing that double top right now. The S&P is making a push higher, and it switches things around a little bit. We were just below, but overall, I'm expecting it to slosh around against this point of control, make an attempt lower. If it does, I would be stalking long in the 2778, 2777 area. I'm looking for an impulse higher, and then for it to continue, since it's mostly daytime frame in control, 2789.75, consolidate, push up, consolidate, and finish in this 2791 area. That's the primary scenario, being a continuation. Remember, we're in an uptrend here. Okay, expecting a continuation of the same, expecting more short time frame trader control, not expecting a huge trend up or anything. Of course, there's a lot going on geopolitically. The president of the U.S. is in Asia, and there's a lot of discussion about North Korea and so on, and trade and things like that. So that can always kick in. But under its own power, the market's likely to continue to drift higher. Okay, secondary scenario, an open auction that just grinds sideways and then just continues to grind up throughout the session like we've seen the last couple of days. Sellers unable to step in. Okay, this has equal value or equal probability as scenario 1, so we need to move to scenario 3. Scenario 3, a quick push on the open. Market on open orders takes it higher. We push through the overnight high for the overnight stat, get tangled into this 2791 area, impulse down, retest, and that brings us down to the key low volume node, and I expect us to get tangled in the stock zone for a bit for a finish that has a higher high, higher low, but probably lower point of control. That's scenario 3. I've talked again and again and again about why I'm creating these scenarios and how they're actually traded, so it's not just, we're not just doing some mental exercise, although I visualize these before I trade them. Having the scenarios tells us, okay, what is this market shooting for, and then helps us place our trade in the area that's pre-designated. That's these stock zones. And then once we do, then my orders go out to the areas that I expect that scenario to play to, if it does play. And that prevents me from over managing the trade, micromanaging the trade, and taking 3-4 points of heat and taking 6 ticks of profit, which is a problem for a lot of people. So having these scenarios tells me, hey, if it fails back in and you get an impulse inside of the prior day's range, the most important target you have is the key low volume node, which is at 27.74.75. That's what I'm going to hold for. So unless it goes back up and it pushes through the high again, I will not touch that short, right? Just scale out, hang tight. Okay, that's what these scenarios are for. Good luck this week, and I'll catch you tomorrow. Take care.